Good afternoon, it's Christian Thwaites from Brown Janikowski speaking the day before Thanksgiving, November the 25th. A quiet week in the markets generally, but three important data points which came out this week which we think are going to be important for the rest of the year. First of all, the GDP second revisions came out. So this is the second estimate of what happened in the third quarter of GDP. It's going to be important for the Federal Reserve when they meet in December. The numbers were revised up a little bit, but essentially we're in the same band as we have been for much of the time since the post-recession period, at about 2.5% growth. The numbers were 2.1%. Take a look at this graph, which shows federal spending as a percentage of GNP. It's now at its lowest level in nearly 14 years. So one point about this post-recession and the growth and this current GDP numbers is that the federal government has precious little to do with the growth in GDP right now. It's remarkable how much this has tailed off as a percentage of our overall economy. Secondly, we also saw very important real disposable income numbers. We look at these very, very carefully because this actually shows what people have in their pockets to spend at the end of the year. At the end of the day, the numbers were not particularly strong. They were flat year over year, and important also because the number in here is what the Fed tracks for inflation. The PCE number is essentially coming in at 0.2% year over year, which is way below the Fed's inflation target of 2%. So they are not meeting the targets on inflation, not even close to it, which kind of makes the rate rise, we think, for December a little premature. Thirdly, here's another chart that we've been tracking, and this is the China Economic Policy Uncertainty Index. It basically tracks what people are thinking about regulatory, the government, interest rates. You can still, it's at very high and elevated levels, a little bit off the August high when the stock market crashed, but this is an important market and it's not doing particularly well in terms of its uncertainty. Finally, looking over to the markets, quiet week in the equity market, still trading in that 22,000 to 2,100 band, so top end of its range. That's good. Had some pretty disappointing numbers from some of the top industrials. Caterpillar announced a 13% decline in its sales. That's obviously a major industrial which is affected by the strong dollar. And then going back to the IPO market, we saw Square, which was slightly ridiculous company, which has been way overpriced, and we saw it slip below its IPO price. So that's not good for confidence. And finally, the very big merger between Pfizer and Allegiant is coming under a lot of political pressure. If that does not go through, I think that will be a major blow to market confidence. We're also looking at the bond markets, which are sort of trading in within a relatively narrow range and don't seem to be too concerned at this point, but keeping a close eye on investment grade spreads. That's it for this week. Look forward to catching up with you next week. Have a very happy Thanksgiving, and we'll speak to you soon.